Welcome. In this video, XCN can be bullish after 15 days. So why? We will analyze it. Don't forget to subscribe and like, and please watch to the end to understand.
Examining a specific trend on a price chart plays a major role in shaping investors' expectations for the future. In particular, a descending curve or a downward trend line is one of the most noticeable and frequently encountered patterns in the markets. This is because the presence of a descending curve signals that sellers are dominant in the market, while prices moving below this line indicate that buyers are not yet strong enough and that the overall direction of the market is downward. At the same time, however, this descending curve serves as a kind of boundary in the eyes of investors. If the price can close above this line in a sustained way, it signals that sellers have lost their strength and that buyers may step in and change the direction of the market. In other words, breaking a descending curve essentially means the start of a new story in the market. To understand a descending curve, one must first grasp the psychology of price movements. When the price of an asset starts falling from a certain peak, market participants take profits or panic sell. This process works in favor of sellers, and the price trades at increasingly lower levels. At this point, the drawn descending curve shows that the price is being pushed lower with every attempt. In other words, every time the price touches this curve, sellers step back in and prevent it from rising. This is a critical signal for investors because for the market to change direction, buyers must overcome the selling pressure and push the price above this curve. If that happens, a psychological shift occurs in the market and investor perception begins to change. Breaking the descending curve is not just a technical detail, but also a clear reflection of market psychology. This breakout shows that sellers are no longer as strong as before and that buyers have entered the game. Once this breakout appears on the chart, most investors start to think the downtrend may finally be over. This expectation brings new buyers into the market as well. Those who believe the price will rise buy in so as not to miss the opportunity. As a result, the price climbs further, starting a new wave of upward movement. This is why a breakout above a descending curve is seen not merely as a technical detail, but as a sign of a potential strong rally. The importance of the breakout doesn't stop there. Once the price moves above the descending curve, investors who had sold earlier or who didn't trust the rally begin to reconsider their positions. Many investors think, if the price has moved above this line, I have to accept that the decline is over and re-enter the market. This further strengthens the buyers. Thus, breaking the descending curve triggers a sort of domino effect. First, small investors, then large players join the rising price, and the direction of the trend changes permanently. In technical analysis, such breakouts are often assessed together with volume. If the price breaks the descending curve accompanied by strong volume, it suggests that the breakout is not fake and is likely to hold. This is because a breakout with the participation of big players and institutional investors supports stronger upward price movement. A breakout without volume, on the other hand, can sometimes be misleading because even if the price briefly moves above the curve, if buyers are not strong enough, sellers can step back in and push the price down again. Therefore, what investors need to watch is not just the break of the line, but the strength behind that breakout. Another important point is this. When the descending curve is broken, new technical targets emerge in the market. Previous levels on the chart that had been tested but not surpassed become potential targets for buyers. In other words, if the price manages to hold above the descending curve, the next stops are usually the nearest resistance levels. As resistances are broken one by one, the price climbs higher and the uptrend gains strength. This makes investors think of the possibility of a big rally after the breakout. At this point, investors should remember that the descending curve is a kind of locked gate. Once the price opens this gate, new paths open ahead. Even investors who previously hesitated to enter the market step in because the breakout is a visible signal for everyone. This has a strong psychological effect. For example, investors who have seen the price move below a descending line for a long time treat every upward move as temporary and don't buy. But once the price breaks the line, believing that the downtrend is over, they eagerly turn to buying. This accelerates the rise. Historically, rallies that began after descending curves were broken often continued with strong moves. This is because such breakouts hold great significance not only technically but also psychologically. Regaining investor confidence, improving sentiment in the market, and the participation of new investors give the price upward momentum. That's why many investors see breaking descending curves as a zone of opportunity. In conclusion, seeing a descending curve on a chart shows that the market is still under the control of sellers, but it is also an important sign for a potential future breakout. When the price breaks this curve, the mood of the market changes, sellers lose control, and buyers take over. The upward wave that follows this breakout is often strong, as both technical analysis and investor psychology support the move. Therefore, the price moving above the descending curve shows that a new story is starting to be written in the market. And this story is often filled with growth, confidence, and strength. But we can't base our analysis on the curve alone. Let's take a look at the other metrics too. Stay tuned.
One of the most important indicators in technical analysis of price movements is the formation of bottoms and tops in the market. The price of an asset fluctuates constantly over time. During these fluctuations, certain levels form. Among these levels, one of the most crucial formations to pay attention to is the pattern of higher highs and higher lows. If the price, over a certain period, forms new lows above the previous low levels and at the same time creates new highs above the previous highs, this is considered a strong indication that an uptrend has begun from a technical standpoint. Higher lows show that buyers are starting to step in at higher levels each time, while higher highs indicate that sellers are now willing to sell at higher levels, and buyers are able to meet the demand at those prices. This process clearly reflects the psychological dynamics of the market. The formation of higher lows reveals that the market no longer accepts lower levels, and that selling pressure has weakened. For example, if the price had previously dropped to $100 during a pullback, but during the next pullback finds support at $110, this proves that sellers are now willing to retreat at higher levels and buyers are entering the market more strongly. At the same time, higher highs show that buyers are willing to purchase the asset even at higher prices. For instance, if the price had previously reversed at $150, but in the next rally rose to $170, this indicates that demand has strengthened and supply is starting to dominate at higher levels each time. The combination of these two structures, both higher lows and higher highs, is one of the most solid signals in technical analysis that an uptrend has begun. As the uptrend begins, investor perception also starts to shift. As the market forms higher lows and higher highs, participants gain confidence and more buyers enter the market. This increases price momentum. In fact, the appearance of these structures shows that the supply-demand balance has shifted in favor of the buyers. In a downtrend, sellers are stronger and the price finds support at progressively lower levels. However, in an uptrend, the situation reverses. Buyers now dominate and consistently step in to push the price higher. Therefore, when a technical analyst sees a pattern of higher lows and higher highs on the chart, they may interpret this as a sign of a trend reversal or the beginning of a new bull market. To better understand the importance of this structure, it should be compared with a downtrend. In a downtrend, continuously lower highs and lower lows are observed. In this case, market participants expect the price to keep falling to lower levels. Buyers wait to purchase at cheaper levels and do not rush, while sellers continue to exert selling pressure even if they must sell at lower prices. However, when this structure breaks, when the price no longer closes below previous lows and starts rising above previous highs, the seller's strength is broken. With this break, the trend changes direction and an uptrend begins. To confirm an uptrend, at least 2 higher lows and 2 higher highs must be observed. Seeing just 1 higher low or 1 higher high may suggest that it was merely a coincidental market movement. The upcoming token unlock for XCN, scheduled to take place in about 15 days, is a development that has generated significant curiosity in the market and caught the close attention of investors. In the crypto world, the term token unlock refers to the release of previously locked tokens, which could not be sold for a certain period, into circulation.
Such unlocks often increase market volatility because, on one hand, the circulating supply rises, and on the other, how investors choose to handle these newly available tokens determines the future price. If investors decide to sell the unlocked tokens quickly, it can create selling pressure. However, if they choose to hold on to them, or if new buyers enter the market, the price may make an upward move instead. At its core, the balance here depends on investor psychology, the general market sentiment at the time, the confidence surrounding the project, and the expectations being set. XCN's upcoming unlock in 15 days can be seen as a turning point. Since it has been anticipated for a while, many investors have already marked this date on their calendars and developed strategies specifically for it. To understand how the market operates, it's important to know this. Price movements in crypto assets are shaped not only by supply and demand, but also by expectations. In other words, even the rumors, possibilities, hopes, and fears circulating among investors before an event can influence price action. For this reason, in the days leading up to XCN's token unlock, various scenarios will be discussed. Some will argue that heavy selling pressure may come, while others will claim the price might experience a short-term correction first, then strongly recover and gain upward momentum. On the day of the unlock, a significant spike in trading volume may be observed right from the market opening. This is because investors will move quickly to see how the price reacts to the release of tokens that have been locked for a long time. At this point, if there's a positive atmosphere surrounding the project, such as new partnerships, updates, exchange listings, or exciting developments on the roadmap, the unlocked tokens may remain in investor portfolios instead of flooding the market. In such a case, even though the circulating supply increases, selling pressure remains limited, and the price may make sharp upward moves. Additionally, token unlocks revealed the psychological differences between large whale investors and smaller retail investors. Whales, with their ability to influence the market, may try to direct the price to certain levels before the unlock day. For instance, they might suppress the price ahead of time to trigger more selling from other investors, then accumulate at lower levels and profit from a post-unlock price rise. Retail investors, on the other hand, often act based on panic and tend to avoid uncertainty. Therefore, one of the main factors determining price movement on the unlock day is the strategy whales adopt and how retail investors react to it. In XCN's case, it's important not to forget that the token unlock is also a test of confidence. If investors believe in the project's long-term future, they will prefer to hold on to the newly available tokens rather than sell them immediately. This not only prevents price drops, but also sends a message of confidence to the market. On the other hand, if investors choose to sell at the time of the unlock, even though there may be short-term price pressure, strong hands could step in to absorb the selling, potentially leading to upward price movement afterward. As has often been seen in the crypto market, post-unlock selling pressure can be followed by sharp price increases once buyers return. The idea that the price may want to make a move upward takes on meaning here. The market mechanism is not only a mathematical balance of supply and demand, but also a dynamic shaped by collective psychology. If the majority of investors view the token unlock as a fresh start rather than a selling opportunity, the price can suddenly begin an upward breakout. Factors that can strengthen such a move include market sentiment, XCN's communication strategies, social media engagement, and the overall state of the crypto market. For example, if Bitcoin or Ethereum are in an uptrend during that period, confidence in altcoins rises, supporting XCN's price action. Furthermore, the unlock day is full of opportunities, especially for short-term traders. High volatility means rapid price drops and sudden spikes, creating major profit opportunities for those focused on trading. However, the critical factor here is emotional control. Volatility always carries risk as much as it carries opportunity. Investors who remain patient and strategic and who can correctly anticipate the price direction after the unlock can achieve significant profits. In conclusion, XCN's token unlock in 15 days has the potential to drive strong price movements. The price may indeed want to make a move that day because for a time the market will have its eyes on this event. However, whether that move is upward or downward depends entirely on investor behavior, the general market trend at the time, and the confidence built around the project. If investors act with a forward-looking perspective instead of rushing to sell their tokens, the price could experience a sharp upward jump on unlock day.
Even if that's not the case, after short-term fluctuations, the likelihood of strong hands accumulating tokens and pushing the price upward in the following days remains quite hot.
Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.